So the financial year 2026 started on a very good note. And if you see from April 1st onwards to till date, so many stocks in broader market has gone up between 25 to 50%. Even some have gone up more than 50% also. Even our recommendations, if you see the last month we gave Vidya Wire at 63, yesterday came to 95 levels. Almost 50% it has gone up. So like that, hundreds of stocks has gone up 25 to 50% and more since April 1st. And though indices are not moving anywhere, the real action is in broader market. If you see that so many of the portfolios are doing very well, those who are doing momentum trading and stock picking, their portfolios are really doing well. Only the index is not doing well. The reason we will see in coming slides why our indices are not doing well and whether it will give good returns from here on, at least in the near term, that we will see in coming slides. But if you overall, if you see Indian markets, they are underperforming. So if you put a table from top to bottom, good markets to performing markets to non-performing markets, most probably Indian markets will be in the last quartile in the non-performing segment. So the main reason for that is that foreign institutions are continuously selling and their main holdings is in the index stocks. So that is why index is underperforming. And also the earnings growth in broader market is much good than in the index stocks. And most of the stocks in the broader market, mainly retail investors, large operators, large domestic family offices, HNIs, they are more interested in it, where they are mainly buyers, they are not sellers, unlike in index stocks. So that is why the broader market is doing well due to high liquidity as well as good earnings growth. And multiple global markets are at all-time high. On a daily basis, US market is doing very well. S&P 500 are record high, and some of the AI players market like Taiwan and Korea, Kospi, they are all at all-time high. They are doing well. So many stocks are doing well. That is why foreign institutions are selling here and they are moving their money to that. Also, the rupee is continuously depreciating. So whenever a currency depreciates, means no foreign investors comes and invest, because they lose a lot of money on depreciation of currency also. That is also one reason why our currency is losing. That also we can discuss in coming slides. Mainly two reasons: crude oil prices which are high, which is our main import component, and second thing is that the foreign flows are not adequate. The FDI flows are not adequate to compensate for the foreign institute portfolio investors selling. For that reason, our currency is continuously weakening. And for in the last 1 month, if you see between our two meetings, Sensex is almost flat, whereas mid and small cap has given decent return. Nifty mid cap 7% up, and small cap almost 10% up. And if you see the current market perspective, and large cap indices are not doing well, and most of the mutual funds also would have been giving a lackluster return in the last 1 to 2 years, because their core investment is in large cap stocks only. And whereas the broader market, if you see, there are multiple stocks doing well, and NSE mid cap indices touched the all-time high, historic high day before yesterday, whereas Nifty is still around 8-9% away from all-time high. And multiple themes and stocks are doing well. See, we all know that whenever a theme comes into limelight in this social media world, the stocks goes up 50%, 100% within no time. And if you see many stocks chart, there is a vertical rally since April 1st, and many stocks related to power, then power, defense and all, no, they have gone up vertically in the last 1.5 months, and many people have made good money in that. And fundamental stock pickers, momentum traders, all their portfolio are doing well. See, a few months back, PSU banks were doing well, so momentum traders were trading in that. And when that game was over, they shifted to defense stock, power stocks, AI related themes, data center related themes, and they are playing in that. And all these stocks are doing well. See, one company called Sterlite Technology. It's a optical fiber cable company. Just 2-3 months back, it was trading around 120 rupees only. If you see yesterday, it was trading around 370, 380 levels, locked in upper circuit. So 3 times it has gone up in the matter of few months. Because what they are saying is that for data center, a lot of optical fiber cable is needed for to transfer the data. So some stories will get built, and if you look that, maybe some may become true in the next 2 years, 3 years down the line. No, some maybe become true, and some may be purely story telling themes. Some of them maybe. See, many would have remembered that a company called Anandaraj Industries. So 2 years back, when this data center theme first came, the first stock to rally was this Anandaraj Industries. They said that the Anandaraj was involved in data center, so they will be benefited, and that's heavily on data center theme. And the stock went from 400 to 1000, 1200. It went, and after that, it fell to below 500. Now no one is talking on that stock, even when other data center related stocks are going up. So we have to do some due diligence in our uh, analysis, and then pick the stock, because something goes wrong means the stock will not fall by 10 or 20%. It will fall by 50, 60%, and we should not get trapped in that, because once the stock fell by 20, 30% from our buy price means, then we don't know whether to buy further, whether to exit it or to average it, to hold it. Then we won't be knowing it, and nobody will be talking in social media also this stock. Just we can check it. 2 years back, 1.5 years back, everyone was talking about this Anandaraj Industries and data center theme. Now no one is talking about it. Every other stock is going up. So some due diligence needed. And many stocks in defense and aerospace related stocks are trading around more than 100 PE, and more than 20 times, 30 times their sales it is trading. So some due diligence we have to do and buy it. We should not get carried away. Even if we get carried away, we should know when to exit it. That is very important in that. Because whenever stocks falls means, then another new theme will come, and no one will talk about the existing theme. And US-Iran update, the war is over. There is a ceasefire is going on. There is no major fire exchange. Only thing is that the Strait of Hormuz is still closed, and US is continuing its blockade. The US is not allowing Iran ships to go out, as well as no new ships are allowed inside to reach the Iran harbor. So US blockade on Iran is continuing. Similarly, the Strait of Hormuz blockade is continuing. So many countries in the Gulf region, they were unable to export their crude oil. Their position is there. US has submitted some 14 points peace program to Iran. Now Iran has to respond it. Most probably in the next couple of days, we will come to know. I hope that it will get over in coming days. So once if it happens, and if crude oil prices fall around $80 means, then some of the sectors like banks and all, they will start doing well. As of now, the banks are not doing well because of the high crude oil prices, which means higher inflation, and many other products prices also has gone up. So inflation has to fall for bank stocks to go up. For that, the first indication will be the complete stoppage of US-Iran war and opening up of Strait of Hormuz, which will be clearly reflected in crude oil prices. Globally, if you see, so many markets are doing well. The main reason for that is that our market lacks AI theme stocks. Actually, we are negatively impacted because of this global AI rally. Because what they are telling is that if AI is doing well means, the Indian listed IT companies will do badly. That's what they are telling. Most of the analysts are telling, and India is inversely proportional to this AI rally. And AI dominated markets are doing exceedingly well. Even some of the big markets like Japan and all has given huge returns in the last 1 year. US, Japan and all given huge returns, and some of the markets which semiconductor manufacturers in the related countries like Taiwan, Korea, they have done exceedingly well. And foreign institutions exiting India and moving to these outperforming markets, naturally it will happen. See, we Indians generally invest in India only, whereas foreign institutions, they have portfolio of countries. And suppose if you have a portfolio of stocks of 20 stocks you are holding, 10 stocks is doing exceedingly well. Another 5 stocks is not moving anywhere. The another 5 stocks is continuously falling, means what most of them used to do is that they try to sell the falling stock, and they will try to put more money on the top 10 stocks which is moving up. The same way the foreign institutions they are doing. They have invested in multiple countries, and some countries are doing exceedingly well, and some countries are not moving much, whereas some countries are continuously falling and they are losing on currency also. Means naturally those who are having very low weightage on this country, they try to exit it. Even some many clients know, some of the our clients know, they also do the same thing. They don't want to see a loss making stock in their portfolio, so they will, if it is a small quantity, means they will try immediately, they will ask to sell it, because they don't like to see a loss making portfolio stock in their portfolio, and many used to do it. The same way many foreign institutions also doing, and that is why they are continuously selling. Even yesterday also they have sold 5,000 crores, they have sold it. And their main holding, if you see that, their main holding is in a large cap private banks, HDFC Bank, ICICI Bank, Kotak Bank, and IT stocks, Reliance Industries. These are their major holdings. So these are index heavyweights, and naturally index will underperform because of their selling. And this is the AI listed related stock markets. And if you see this, this is the Taiwan index. It has doubled in the last 1 year. 100% it has gone up. This is the Korea Kospi. It has gone up near to 200% in the last 1 year. So people are minting money there. Foreign institutions are minting money in these markets. Even the same thing happened in India in 2000, 99 year it happened, 98, 99 time it happened on IT stocks when US was, Nasdaq was doing very well. India benefited heavily, like how this Taiwan and Korea and all benefiting now. The same time we also saw in 1998, 99, 2000 time, early 2000 time, before the dot-com bubble crash, that so many stocks used to go up on a daily basis. 5%, 5%, 5% ceiling it will hit in the morning. 9, at that time market was opening at 9:55. Now 9:15. No, 9:55 opening itself, many stocks will hit the ceiling. 5% ceiling it will hit. All the IT stocks, Pentafor Software, DSQ Software, Satyam Computers, and large cap Infosys, Wipro and all, in a matter of 2-3 years multiplied hundreds of times at that time. Just like how the chip companies now they are going up. So the risk in this Korean Kospi and all, what means it consists of 2 stocks only, which has a weightage of near to 50%. Samsung and the other one Hynix, semiconductor and chip manufacturing companies. In the last 5 years, between 2021 to 2025, Korean stocks has given 0 returns. And the next 1 year, it has given 200% returns because of this 2 stock. So market always like that. It won't move for 4 years, 5 years, and next 1 year it will give huge returns and will compensate for the whatever we have missed it. So that is why most of them used to tell that you should be remain in the market. Once you exited, means you can never catch the rally, because the stock price we would have seen at 100 rupees, it will go to 110. Then when you will wait for the stock to fall to 100, but it will never come back. It will fall to 105, then again go to 120, and then 130. Then you will be prepared to buy at 115. Like that, the stock price will keep on going up. That's why most of them used to tell that you should never exit the market completely. In trying to time the market, when the market goes up, you can enter it. Maybe out of 100, 3 or 4 can do it, but more than 90% of the people cannot able to catch the market when it started rally. Because even you can see now, February, March, a lot of mid caps fell. Some of them sold it, fear of this Iran war. But in April, many stocks went up by 50, 75%. But most of them could not have bought back. Nasdaq, you see, it has gone up by 43% in the last 1 year, and back of very good rally in previous 2-3 years. At least Kospi and all, between 21 to 25, it did not went up, whereas Nasdaq was continuously doing well. So 43% it has gone up. And this is the Nifty weightage. If you see HDFC Bank, 10% weightage is a, when HDFC was merged with HDFC Bank, the weightage was near to 13%. Now it has fell to just about 10%, mainly because of its underperformance. The stocks was not doing well. Especially post merger, the stock did very badly, and because of poor performance, the weightage fell from 13 to 10. And then and the other private banks where the weightage high is ICICI Bank is there. Then you have this Axis Bank, Kotak Bank is there. The other sector which is doing exceedingly very badly is the IT stocks. If you see that Infosys is having 3.7% weightage, overall 8% weightage is there in Nifty. Infosys, TCS, HCL Tech, all they have all they are index stocks near to 8% weightage is there. Actually, their weightage was at 10%. Because of huge underperformance and steep fall in stock prices, the weightage has come to 8%. So the private banks and private banks alone has around 25% weightage in the Nifty. And if you add another 8 on this IT stocks, 33% weightage. Almost one third of the index is not doing well. All this one third of index is heavily owned by foreign institutions. If you see that the HDFC Bank in the last quarter, January, February, March, shareholding pattern, FIs have sold huge quantities of this HDFC Bank shares. Most of them bought by domestic mutual fund. Among them, one of the big buyer was this Parag Pareg Flexi Cap Fund, which is the most favored fund among Indian investors in the last 5 years. That fund has bought huge quantity of HDFC Bank, which was mostly sold by this uh, foreign institutions. So, like because of these index arrangements, we are unable to move much. So, what I personally feel is that index will continue to underperform. Only the broader market will do well, and we have enough opportunities in the broader market, and they will continue to do well. Even some of the recommendations we have given, no, most of them are doing very well. See, one company we gave a few months back. It's a company BSC listed as a BSC or Kenna Metal. Yes, it's a BSC listed company, Kenna Metal. We gave a 2,100 rupees. We gave, it's an MNC company, US based MNC company. And if you see that yesterday, the price came to 3,100. Almost 50% appreciation it has given in the last 2-3 months. It has given. It did not fell much like other stocks, but still on going up, it has been doing well. So like that, so many opportunities are available. See, yesterday one company results is Grindwell Norton. It's a good company. Its parent is Saint Gobain. It's a very well-known company globally, Saint Gobain. Grindwell Norton results looking very good. So for last 4 years, the stock has given 0% return. I feel that from here on, it may do well. The results were doing well. They are in abrasive manufacturing, and it's doing the results are good. It may do well. So like that, many stocks in the broader market like it to do well, as results are also good, and liquidity also chases the good results. So as I told, now Indian market why underperforming, foreign institutions top holding includes these private banks and IT stocks, which I said earlier. So both sectors lack meaningful growth. See, HDFC Bank continuously showed 20% growth for many years, and more than 10-15 years, it continuously used to show 20% growth. Once they merged with this HDFC, its parent company, the growth slowed considerably. So on one side the growth was lower, other side the valuations was high. So that is the reason why foreign institutions were selling it. IT stocks, as of now, there is no meaningful growth. Only a few percentage points they are showing growth, and the valuations has corrected largely. And now the AI threat is there, which may many of them may don't want to take the risk on this IT stock. So it has become like an dividend yield stocks, at least on the index listed one. Infosys, TCS, HCL Tech, Wipro, and all, they have become like a dividend yield stocks. And because of the lack of meaningful growth, they are trimming their portion. and persistent selling by foreign institutions in these counters are the reasons for the Indian underperformance. And also some of them say that one of the reason why foreign institutions are selling is due to the taxation. We have short-term capital gain of 20% and long-term capital gain of 12.5, and many countries they don't tax foreign institutions, whereas in India we tax foreign institutions. So that also one reason why many new money is hesitant to come to India. So because of the fall in index and gradual earnings, the valuation has become attractive. It has come to their mean level. At least in the Nifty price to book multiple, it has fallen to the mean level. It has fallen. It doesn't mean that when it falls to mean level, doesn't mean that immediately it has to bounce back. But at least some valuation comfort is there. At least some long-term players, they may come and buy. Auto sales, we were closely watching it. Actually, January, February, March was exceedingly good, and many of them were expecting that some slowdown may happen in April, but that did not happen. Almost all segments did well. The passenger vehicle sales was grown by 12%, and two-wheelers by 13%, and commercial vehicle by 15%. So it's a decent growth in the month of April. So it is the data of Federation of Automobile Dealers Association data. Auto sales, actually we get two figures. Many times I have told in this meeting. The one is the company declaring their auto sales, where they sell their vehicles to the dealers, and the second one is that dealers themselves, they will release the one figure of how much vehicle they have sold. So this is the dealers, how much vehicle they have billed to the retail clients. That is the data. And many times what used to happen, companies used to dump vehicle to the dealers. So dealers will be holding on huge inventories, whereas the company sales will look very good. So mostly it will be prudent to see both the data, and at retail level it looks decent growth in April also. Maruti and all, they are doing in the month of April. The monthly sales was very good, as well as the both domestic and exports did very well. So the themes in limelight. So these are some of the themes which were doing very well. Power ancillaries were doing exceedingly well. Power ancillaries meaning transformer companies. For last 3-4 days, the transformer companies fell because of the poor results. Cable companies were doing very well. Cable companies, many companies we have recommended it in the past, as well as a precision wire which was trading at 125 1 year back. Now it has come to 420. So on that basis only, last meeting we gave Vidya wire, where it was trading around 63. So in 1 month time it has given almost 50% return. It is 95 now, 50% gone up. So like that, so many cable companies went up very sharply. Both coaxial cables, winding companies, as well as the optical cable companies, almost everything has gone up. One company called Universal Cable, it went up very sharply. Then the Sterlite Technology, where they are the market leaders in optical fiber cable, they did very well. Then winding companies, this Vidya wire, precision wire, they did very well. So power and power related companies are doing very well. What they are telling is that power is one of the most important thing for this AI, because data center needs huge power. That is why this power and power ancillaries were doing well. And even some of the solar themes related companies are doing well. Data center and all, it will come. There's stocks related to the data center. This data center cooling company, it generate lot of heat. Data center servers and all will generate lot of heat. So for them to cool, the heat exchanges companies, their stock prices are going up. KRN heat exchangers and Euroflex, both these stock price went up very sharply. So whatever related to data center, the stock price are going up. Defense, if you see, many defense, particularly this mid and small cap defense companies, they are doing very well. Data pattern, and then you have Azad Engineering, which is related to aerospace. Then another company, Axis Case Sets, So like that, so many companies are going up. We have to be very careful. See, data pattern, their revenue is less than 1,000 crores. Market cap is 23,000 crores. So the 23 times, more than 23 times their sales, it is trading. Similarly, Azad Engineering, if you see that their market cap is 13,000 crores, whereas the sales is around 500 crores. 25 times their sales, it is trading. That means next 5 years, 6 years earnings is already discounted. All these companies don't generate much cash flow. It's a highly capital intensive industries, but still market is ready to give. So we have to be very careful in many mid cap defense companies. Apollo Micro is going up, Paras Defense is going up, and silently one sector which has gone up very well in the last 1.5 years is metals. Almost all steel stocks has gone up. Similarly, non-ferrous metals like Hindalco, then Vedanta because of his corporate actions. All this has given very good returns. Chemicals, now only it is going up. Slowly it is going up after many years of down. Many chemical companies showing good bottom formation and starting to make some rallies. This is the power index, and it has gone up 27% in the last 1 year, whereas Nifty has given 0% return, whereas the power index has gone up by 27%. And if you see, sharp move in the power stocks in the last 1.5 months. It was consolidating for last 1 year, and sharp move, vertical move. IT index, just a reverse of it, falling very sharply, like a waterfalls fall. A small bounce back, then again it has come down. But I expect that it may stay in this range. Big capital appreciation is very unlikely from here. Maybe 10%, 15% maximum we can get the return until this AI threat is resolved. Good dividend yield. It may give good dividends. It can give. Q4 results reasonably good. This is a combined 517 companies results. Sales gone up by 15% and profit is by 16%. And many of the companies which I track, no, they are posting very good results till date. And next week, so many companies also coming. If you compare to last year, the same of the same company, their growth was 7.5, 7.2, around 7% revenue and profit growth, whereas now it has almost doubled. So broader market earnings were good. Rupee all time high many times. We are seeing it. I told what is the reason for this sharp depreciation in rupee. On one side, foreign institutions are selling continuously. On the other side, the import we are doing crude oil prices are much at much higher level, which means more dollar need. That is why the rupee is continuously depreciating. On crude oil, $95 it is around $95. So for Indian market to do very well, at least on the index level, if you want index to do well, means the crude oil price has to come at least to the 80 level or below that. Then only our index will do well. Till then, we will see action in the broader market. Foreign institution continuously selling, and if you see in the last 2 years, they sold huge amount. FY25 1,27,000 crores, FY26 1,80,000 crores, FY27 that is just April and 8 days passed in the month of May. Already 68,000 crores they have sold it. This is till May 5th. So last 3 years they have more than 2 years they have sold huge amount. And this is the net sold October 24th to February 2025. They sold huge amount. Just 4 months we had some buying last year. Again their selling started. Huge selling. The month of March, if you see, 1,22,000 crores they have sold it. Overall, near to 7 lakh crore they have sold from October 2024 to till date. That comes around $74 billion. So money going out of country is always negative. Liquidity squeeze will happen. That is why RBI is putting more liquidity in our market. So whenever FII sells and take back the money, means what will happen means the liquidity tightness will come. That is why the banks have started underperforming because of this only. So rupee should stabilize, crude oil price has to fall for banking sector to do well. Mutual funds, this month data we haven't received it. So only on Monday only we will get it. And because of this only, at least our market is holding on. Because when foreign institutions sells, means at least 50-60% of the stocks are bought by this large cap mutual funds only. Among them, the big buyers are this Parag Pareg Flexi Cap fund. Almost 1,40,000 crores AUM that one fund has. So last month they have bought huge quantity of TCS, Infosys, and HCL Tech. They have bought it. Big quantity they have bought. So who is selling? Foreign institutions are selling. Who is the buyer? The counterparty is the domestic mutual fund. So mutual fund is domestic mutual fund inflows are decent. That is why at least these stocks are finding some FIs could be able to exit it. If domestic institutions also absent means FIs could not able to sell it. So broader market, there is good opportunity is there. See, current rupee has depreciated a lot. So a lot of export oriented company will do well, particularly pharma companies. Then many export oriented chemical companies are there. And similarly, if you see the chemical prices, they move in line with the global market. So whenever price drops, rupee depreciates means what will happen? Local price will go up. For example, if rupee depreciate by 10% means caustic soda price will go up by 10% because the imported price will become higher. So all these commodity related chemicals, basic chemicals, they move in line with the currency depreciation. That will act them positive. And export oriented companies, their earnings will go up because they get in dollars and euro. Both has appreciated a lot. So these companies will do well. And a cash rich company may announce buyback. Already that has started. The first one big buyback that will come in the month of June is the Wipro buyback. They have announced the buyback, and Bajaj Auto has announced their another 5,000 crores buyback, and many mid cap companies are started announcing the buyback. So this in current year we may see large number of buyback because in mid cap company price also has come down. So due to that, more companies may announce the buyback. So events to watch, mainly this geopolitical tension we have to see, and foreign institutional activity. It has to stop for index to do well. And then the next one is the Q4 results. So since it is a Q4 results, the results will come till March 29th. If it is a quarterly results means, then before 45 days company has to declare. It is an annual result, so 60 days times will be given, and results will come till May 29, 30. And most of them will watch it closely, because during that time only we will get some good stock ideas. And next week lot of companies are coming out with results. Very interesting companies are coming out with results. Okay, thank you.